Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some more of the stocks that were in play last week of the small caps. And so first up, we're going to take a look here at NVLN. So it did close up 36%, huge move there last week. A very nice two-day move. You know, RSI and Fasto are both in the bull zone here. You've got a close on Friday or Thursday above the middle Bollinger Band at $1. That level held, and Friday there was another close higher. It is above the upper Bollinger Band, so you can see the upper Bollinger Band here is at 143. So if the candles work back in the band, you want to see this EMA 4 at 126 level hold. Okay, it's hitting some resistance here. You know, in the 170s. What it really needs to do is come up here and break the green line. That's the 50-day simple moving average at 224. So if it comes up there and hits that level and it fails to break, that'll be a temporary top, and it's likely to pull back and test support. If it can close above that level next week, that should be the signal that it wants to head higher. If you look here at the 15-minute chart, you can see a symmetrical triangle pattern has formed. There's descending resistance and ascending support, and it's coming to a flex point here. Either the green support line or the red resistance line is going to break next week. Right now, the candles are below the green line, which is the 50 simple moving average at 178. If that remains resistance, it could come down here and test that 100 simple moving average at 127. If it got above that level, what you're looking for is a break above the middle Bollinger Band at 185, and then a break above this red line here, the 208 level, 210 level. Once it's above that, that should signal it wants to head higher, and then you have the high close from the 8th as the big level right around 227. Those are the big resistance levels to break above. Okay, take a look at RGSE here. Okay, real good solar. It's in the bull zone here on RSI and Fasto, and then you have a bullish crossover here on ADX with the green line plus DI crossing over ADX. So the chart's heating up. There was a technical development on Friday that we had been looking for the last few trading days. We are looking for a close above this gold line here. That's the 100-day simple moving average. It's currently at 40 cents. And so as you can see, there was a close above the gold line on Friday. And so that's the technical development we were looking for. That is the current stop loss level. If it were to drop below that level, that would signal downside risk. It would signal more consolidation. If that level holds, that does signal that RGSE could push higher. It needs to break out of this sideways channel. And so in order to break out of the sideways channel, it has to break high close horizontal resistance. And so right now, it's hitting the key resistance levels. Right now, it has to break the high close from November. You can see it was hitting that level right there at 44. And so if it can get above the 44 level, you have the high close. You can see this is the top of this sideways channel. And then a break above, you have these two closes right here on the 27th and 28th of August. And so once above this, it looks like about 48 or so level. That should be the signal that it wants to push higher. You'll have another close over here from July that will need to break right around 54. But yeah, the main thing this week is going to be staying above that 100-day simple moving average and then breaking into the 50s. Okay, so yeah, that was a nice start on Friday. We'll see if it can follow through. If you look here on the 15-minute chart for RGSE, it looks like it's filling the jar. You know, it's working its way back up into the 50s, back up into this high close, which is right around 48.3 or so. And that's going to be the big high close level to break when when and if it's tested. The close here above the high close on the 6th does signal more upside potential. And so if it can get above this 43 level, it could work its way back up into the 50s, like I just said. So yeah, keep an eye on it. Yeah, the chart is bullish right now with the candles forming all above all the moving averages. As long as that middle Bollinger Band at 39 is holding, the uptrend is intact. Okay, take a look at RRTS. Closed up 24%. This chart is heating up. RSI is above 50 now. You want to see Fasto get above 50 as well. There was a close on Friday above the middle Bollinger Band that's currently at 53 cents. That level had been resistance for quite some time. The last close above that level was on September the 18th, and you can see it failed to hold and the downtrend continued. You know, for a little bit of time back here in June and July, it was able to trade above the middle Bollinger Band. So if that level can hold currently at 53, then it could possibly get a new uptrend going. So keeping an eye on it next week. If it dropped back below that middle Bollinger Band, that would signal more consolidation. It's not ready to go. And to the upside, look for the 50-day simple moving average at 77 to be tested next week. It was tested in the end of October, but it failed to break and it pulled back. So it's going to need to close above that level to head higher. If you look at the 15-minute chart, you can see here, or this is the 30-minute chart, so each candle represents 30 minutes of trading. You can see it's above all the moving averages, and so it just needs to keep pushing higher and breaking resistance. You have the high close over here on the 26th, which is right here just above 68. That's going to be the next big level to break. It looks like it's working its way back up into the 70s. There was a lot of consolidation in the 75 resistance zone, so that is going to be a tough level to break. And as long as it's holding above this 400 simple moving average at 62, that's signaling more upside potential. If it were to drop below that level, that would signal that it could start to consolidate. Okay, if you look here at KIQ, okay, so KIQ made a big move on Friday. Let's see here. It closed up 30%, but it formed the long upper wick on Friday's candle, and so as you can see here, it closed. So here's KIQ, closed up 30%. It ran all the way up here to like near 85 or something, and then it pulled all the way back. That long upper wick, signals dilution, shares being sold. If you look down here at accumulation, distribution, and shaken money flow, you could see big spikes down on both of them, and so that's a signal that they were dumping on Friday. So even though it was up on the day and there was this giant volume spike, you had a giant spike down on both of these indicators. That's a clue that they were, selling shares into the rally. That's what penny stocks do. Look at the average daily volume; it's super low, and look at each of these volume spikes. Each of the spikes are followed by a red candle, and so history is likely to repeat here. You're likely to get another red candle on Monday. We'll see though. Okay, so it's going to be all about these two levels right here, the 300 and 200-day simple moving averages. If it could stay above 50, it could try to push higher. It has to get above the 400 simple moving average at 56 to head higher. To the downside, if it dropped below 50, then you want to see this 50 and 100-day simple moving average support levels hold between 44 and 46. If they were to break, the gap between Thursday and Friday, the top of this candle and the bottom of this candle could fill. It could drop down to 39 and fill that gap. That would be the downside risk. If you look here at KIQ on the 15-minute chart, you can see here it's pulled back down to the middle Bollinger Band, or it pulled back down to the 50 simple moving average. It broke below the middle Bollinger Band here at 145 on this red candle, and so that signaled more downside risk. The middle Bollinger Band is this dotted purple line. It's also the 20 simple moving average, and bullish stocks stay above that level. So when it broke below, it was signaling that it was consolidating, and so it came all the way down. It bounced off of the 100 simple moving average, the gold line at 46, and it worked its way back up to the green line, the 50 simple moving average at 51. And so it has to get back above that level. If it's trading above 51 and turning the green line back into support, it could run back up to that middle Bollinger Band. It has to get above that 61 level, the middle Bollinger Band, to get an uptrend going on the 15-minute chart. Right now it's in a downtrend. If that 51 level remained resistance, you would likely see it drop back down into the 40s and test this 200 and 300 simple moving average down here at 45. Okay, let's look at DTRM here. Okay, so this is a very low volume type of stock, but I'm putting it on here because it closed above resistance. You can see RSI is heating up at 59. It closed above the middle Bollinger Band on Friday. I guess Thursday was the first day it closed above, and then it followed through on Friday. If it can stay above 51, it could get a new uptrend going. Just keep an eye on it on Monday for a break above the 50-day simple moving average at 64. If it breaks above it, maybe some volume will come in, and they might try to push it higher. If it fails to break that level, it's the temporary top. You can see the last time it got up to this level, it did close above, but it immediately pulled back. You have to be really careful with these thinly traded stocks. It would be they're very risky to hold overnight. But if you see it break above that 50-day simple moving average, it might be good for a quick trade if it made a run up into that 100-day simple moving average zone. You could see this 90 level was the 85 to 90 level was a big level from back here in September. Okay, let's look at AQMS. All right, so yeah, keep an eye on this one. I'm putting this one on here because it closed above the middle Bollinger Band and the 50-day simple moving average. RSI is at 56. It's trying to heat up here, so keep an eye on it next week. It got above the 50-day simple moving average, the green line at 253, and above the middle Bollinger Band at 242. So if both those levels hold, it could get a new uptrend going. Now it's hitting the next key levels to break already, which is the 100 and 200-day simple moving averages. So it's going to have to trade above 273 there and turn it into support to get a run up to that 300-day simple moving average, or at least up to this high close from October up above 290. Last time it got above the 100-day simple moving average, you can see it failed to hold and it pulled back. It has a hard time, getting above the moving averages, but as you can see back here in April, it got above that 50, got above all the moving averages back in April, and it made a nice run. What is above the 50 and the 100-day simple moving average? It ran up to the 200. So keep an eye on it. If it can get above 273, it might get moving higher. It is bullish on the 15-minute chart, trading above all the moving averages. It needs to hold that middle Bollinger Band at 256. If that level were to break, it could come down here and test this 245 level, the pullback level intraday on Friday, or possibly down to the 50 simple moving average at 2375. To the upside, it just needs to break above this 263 level. If it starts forming candles, and closing above 263, that should be the clue that it wants to keep pushing higher. Okay, let's look at RSLS. All right, this will be the final stock on this video. As you can see here in accumulation distribution and shaken money flow, it had the big drop on Thursday and then a little bounce on Friday. It had this big volume spike on with the VA, and so yeah, they dumped into the news, and yeah, it created the big red candle. And then on Friday there was a green candle that followed. It was trying to bounce. It didn't form the bullish reversal pattern. It's a really ugly chart. I mean, I shouldn't even really have this in the video, but that volume spike was so big. Maybe some people loaded it and they might try to run it. I'm not saying that this is that they will. Just keep an eye on it. You never know. They could get it moving next week. What it has to do is get above this middle Bollinger Band. That's the big level here at 333. They might try to run it from this level back to that level, which is 40% gain or so, which is not bad. But if it were to turn that middle Bollinger Band into support, that's where it could get interesting. The 50-day simple moving average is up here at 532. You could see it was hitting that level, the middle Bollinger Band, and failing to break. It hasn't closed above the middle Bollinger Band in a super long time. Anytime we see a giant volume spike at the bottom of a chart, it's always interesting to us because big players like to load at the bottom. So we'll see if that's the case here. I'm not saying that it is. We'll just have to see if it can follow through and break resistance. If you look here at the 15-minute chart, this is why it's made the video, is it closed above the 50 simple moving average on the 15-minute chart, above the green line here. So if it can stay above that level in the middle Bollinger Band, basically if it stays above 215, it will be in play for a technical bounce here. But if it drops back below, that'll be a major risk to hold. As you can see, this is one deadly chart to be holding if candles are forming below the middle Bollinger Band and below EMA 4 support, which they are right now. So this is a super risky play, but you never know with all that volume that came in on the 8th here. You could see the gap up open. It hit resistance here, the 400 simple moving average. It opened on the 8th above the 300 simple moving average. Notice the big volume was right at the open, and so that's the climax spike happened right away, and then boom, they drove it all the way down. And so yeah, we'll just have to see. That this is looking more like when you see this type of setup that they were just more dumping at the open, as opposed to this would be a much better setup if there was an open up here and it pulled back, and then down here at the bottom there was a huge volume spike down here, and that would look more like people were loading heavy at the bottom of the chart. And so yeah, dumping at the beginning is more, it looks like the heavy dilution, and maybe not that we'll just have to see. It's not the best setup. I threw it in the video just because it's above that 50 simple moving average and the middle Bollinger Band and the 15-minute chart. We'll see if it can stay above 215. If it can, That'll signal more upside potential. It could possibly run up here to the 100 simple moving average at 246. If it dropped below that 215 level, it will be a very big risk to hold. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. All right, thank you.